I'd like to welcome Karen Strassel and Andrew Shebbeare and Amanda Rohrer. And first off, let me ask you to introduce yourselves and include, a little bit about your background, your company, your role at your company, and your experience in CDR, how you got into it. That would be great, just so our students get a sense of career trajectories. So if we could start with Karen, that would be great.
Sure, happy to start. Yeah, thanks first of all for the invitation. Pleasure to be here. Yeah, my name is Karen and I'm actually a chemist by training. So I did a PhD in the field of organic solar cells, so not directly related to CDR and not at all related to VC. At the end of my PhD, I heard for the first time about direct air capture, especially about the company Climeworks, got super excited and joined their R&D team, where I worked mainly on the synthesis of new sorbent materials and also on testing of new sorbent materials. So with time, I got more and more curious about the whole CDR space, and I transitioned to a newly formed CDR initiative, which focuses on identifying opportunities and gaps in the CDR space. Back then, it was called Climate Map, and now they belong to the RMI, the Rocky Mountain Institute. And yeah, to be honest, VC was never on my career list, as I did not even know that this was an option for a chemist, and also because I did not even know about VC at all. So it happened rather randomly. So in 2022, I met Max, the founder of Carbon Removal Partners, at an Air Miners event. And it turned out that they were looking for someone to lead the scientific due diligence process. So this is how I got into VC and how I joined Carbon Removal Partners. And yeah, about Carbon Removal Partners, so we are a venture capital firm based out of Zurich in Switzerland. And as our name suggests, we invest along the carbon removal value chain, which means we invest in companies physically removing CO2 out of the atmosphere, be it direct air capture, enhanced rock weathering, ocean capture, biochar, and so on, but also in enabling infrastructure which is needed to scale the whole industry. For example, monitoring, reporting, verification, marketplaces, carbon accounting, and so on. Yeah.
Yeah, thank you, Karen. That's a really great introduction. And I want to point out that Karen is a judge for our carbon removal challenge. So thank you for volunteering your time for that as well. And I love hearing the shout out to Air Miners connecting you. Air Miners is a similar organization to the Open Air Collective in that it's just a community of people who want to further carbon removal and support each other. So that's a great, and they're a partner of our program as well. So, okay, well, let's move on to Andrew. Would you introduce yourself, please?
Hi, certainly. Thank you so much for having me. Really happy to be here as well. I'm also an accidental venture capitalist. And you introduced us as experienced venture capitalists, but in fact, that's not true at all. And this is my first job. This is my first job in VC. I'm an entrepreneur, I suppose, by background. I worked in a variety of early stage businesses, all with technology at the heart, but in various different verticals, ranging from technology to media, telecoms, finance, for about 20 years at the beginning of my career. And when I left the last of those jobs in 2020, I was determined to work on climate, but I knew that the contribution that I could make would probably need to rest on my experience. Need to leverage the skills that I'd got, which were frankly a bit of a shambles, mixture of things. But I knew how to grow companies, and so I started doing a little bit of mentoring, a little bit of angel investing. In various different kind of climate verticals, and that's how I learned about CDR. And I discovered that was a messy space that needed entrepreneurial help, in which founders had amazing ideas, but didn't always know how to scale companies. And that ticked all the boxes for me. So I got my actually a team from my old company back together, and that was the genesis of Counteract, which is just like Karen's company, is a fund that invests specifically in carbon removal companies and their synergies and enablers around the world across all pathways. And so we've been doing that since late 2020, and we now have a portfolio of 24, I think, pretty evenly spread across nature-based and engineered solutions. I'm a partner in the team, and my primary focus personally is engineered solutions. So I look a lot at DAC and DOC and engineered mineralization, that sort of thing. But we're quite committed to maintaining some kind of balance and diversity across the ecosystem. So generally, we're looking for things that are additive to it, and really grateful to all of the work that you all do in trying to contribute more to that system.
Excellent, thank you. And Amanda, could you introduce yourself, please?
Sure, great to meet you all. Thanks so much for having me here. To round out the panel, I actually come from a finance background. So I've been in finance and early stage investing for the last decade, really focused on the clean energy, clean transportation, infrastructure sectors. Worked with a handful of different funds with slightly different models. Some traditional venture capital, like Blackhorn Ventures, where I am now, some that are using a mixture of corporate equity and project equity to help catalyze, early stage companies. So happy to hit on that later. But I joined Blackhorn Ventures 3 years ago now. I'm a principal on the team. Blackhorn is focused on industrial decarbonization broadly. So we invest across, the energy, built environment, transportation sectors. And I am a member of the investment team, a principal on the team, and I also lead our market insights function, which is essentially our proactive thesis development. And so as part of that, I lead our energy and our carbon vertical. So, different than Karen and Andrew, we're kind of looking across a few different sectors that are driving decarbonization and resource efficiency in different ways. When it comes to the carbon vertical in particular, our approach is to focus more on things like carbon capture and storage within industrial processes, or technologies that are taking captured CO2 and utilizing it in another form, like 12, if anybody's familiar with that company. So a slightly different angle in how we think about the CDR space from an investment lens, and a slightly different venture capital model as well, because we have a few different sectors that we look at across the industrial space versus being specialists within just CDR.
Okay. Well, great. I'm glad that we have such a balance of entrepreneurs, scientists, and financial backgrounds, and that those can all lead into getting involved in venture capital. That's really interesting. So we're going to dive into some questions that I have prepared, and attendees, please, if you have your own questions, please enter them in the Q&A box. And we have Mingren on our team who's here fielding the questions, and he'll help organize them, and we'll address those towards the end of the session. So please use the Q&A box for your questions. All right, so I admit that I don't know much about venture capital, and we don't expect the students to know much about it either. So I want to just do a little sort of background basics of what's VC, why would somebody seek venture capital? What can venture capitalists do to help a company grow, besides funding? Anyone want to dive into that, just to give us a basic lay of the land?
I feel like we should nominate Amanda to take that question. She's the actual VC professional here.
Okay, great. All right.
I'm happy to.
Okay.
Yeah, and please, for everybody on, please feel free to jump in with your questions and make this interactive. So from a high level, venture capital is a form of private investing. So private companies versus, if you think of public companies that are listed on the stock market, for example, any private company would go to venture capital as one of the earliest forms of capital. So a venture capitalist is giving money in exchange for equity in your business. And venture capital versus other forms of private equity, we're typically making small minority investments. So anywhere from a couple percent of ownership up to 20% or so, but really minority investments in the business and focus on early stage startups. So in general, we're looking at early high growth potential opportunities where we are giving you money to help either build out the technology, begin to commercialize in exchange for ownership in the business. So let me pause there. And maybe the high level that I would share is venture capitalists, of course, we're giving you capital. There's a lot more that we could dive into in terms of how we look to help companies in lots of different ways. If you're a CDR company in particular, Karen and Andrew, they really, understand the science and could really support and help on the science. For somebody like Blackhorn, we tend to invest in companies where the technology is a little bit more proven, and we are partnering with our portfolio companies to really help them commercialize. So how do I take this great technology or idea and begin to make money and scale? So that's where we tend to focus and work closest with our portfolio companies. And venture capital is one of many forms of funding that an early stage company can take, especially if you're still in the product development phase and have a highly scientific process. There's lots of different forms of capital that you could consider, grants, or what's considered. There's essentially two buckets: non-dilutive, so any capital that you're getting, such as grants, where you're receiving money to build out your technology, build out your business, but they are not taking ownership in the company, versus dilutive. So venture capital would be dilutive money in the sense that we are taking a portion of, ownership of the business as part of that capital. Let me pause there. Karen, Andrew, feel free to jump in.
Yeah, Karen and Andrew, do you get involved more at the same stage that Amanda was talking about and getting ready to commercialize, or are you doing anything earlier?
I think maybe it's helpful, and I don't know exactly how much the audience understands about how VC works, but maybe it's helpful just to talk about the concept of rounds, and then it might sort of help explain how different funds get involved at different rounds and different stages. So inevitably, as a business grows, it becomes more expensive to run and needs more money. But also as it grows and learns, it becomes less risky. And so later in the business's life, it tends to be worth more and carry less risk. And at the very early stages, where it might just be, one or two founders and an idea, there's a huge amount of risk and not a lot of history yet. So the valuation we tend to think of as quite low. So for that reason, when a company raises money at the beginning of its life, it will probably be able to raise less money for a given portion of its equity or a given percentage ownership. And later in its life, that percentage ownership might be worth a lot more, but it might also attract different types of investors. At that very early stage, you need an investor who's comfortable really investing in an idea and the team. And they might also need to be comfortable that idea might change quite a lot because it hasn't yet turned into a physical reality. Whereas by the time that company's worth a lot of money and has hired a bunch of people, it becomes harder to pivot. So you have to be pretty sure that you've got the right idea. But equally, once that idea has been proven, it's a lot less dangerous because it's sort of been proven out in practice. So for that reason, the company will generally choose to raise a percentage of, to sell a percentage of itself at each different stage as it grows and as its financing grows larger, but quite possibly to different profiles of investor. And those tend to be called rounds. So we call the first round of a company's life usually pre-seed, which is like before you even seed the business with money. It's that little bit of money that gets you going. And that might be anything from a few $100,000 to a couple of $1 million typically. That really is just the genesis. It's just sort of helping the team get started and prove out some concepts. Then the seed round is where you're sort of laying the foundations, hiring the very base team that you're going to need. You need to have proven the concept and have a rough idea of what you're doing and a business plan. And in the best case, you might even have, maybe some potential customers and some letters of intent from some people who want to work with you. The next round is called the Series A, and this is where it kind of gets a little bit more serious and concrete. And typically, by the time you get to a Series A business is expected to have a little bit of revenue, and probably a prototype of the way it's going to work, or maybe even a demo facility that's actually operating with some level of continuity. And by the time you get to your Series B round, and particularly if we're thinking about projects like CDR and direct air capture, you've probably got some projects in the wild, and you might actually be borrowing a mixture of debt and equity. You might have enough confidence that you can start to borrow money from banks or other kind of infrastructure investors to be able to finance some of your projects. So that risk is going down, the rounds are getting bigger, and the investors who want to invest in projects like those will typically evolve. I love investing in pre-seed and seed rounds because it's kind of my bread and butter. I really enjoy taking that risk, getting to know the founders. That's what we're designed to do. It's what investors in our fund invested in us for. And then typically by the time it gets to Series A, we will sort of support our companies, but we're not leading those investment rounds anymore because our fund is too small. And also we don't have the same network and expertise. And you might go talk to Amanda about that round because she's got more capital to deploy. Her investor profile is different and her appetite for risk is slightly different. So that concept of talking to the right sorts of investors for the right rounds and right stages of a business's evolution is quite important. And also thinking about how you plan your milestones to make sure that you can meet the expectations of all those investors as your business matures is quite important.
That was a great overview, Andrew. Thank you for that. I've heard, the B rounds and pre-seed and all this, but it was just kind of, out there as words I didn't quite understand. So that's really great. And then Karen, do you have anything to add to that in terms of what your focus is?
Yeah, this was really a very good summary. So at Camera Partners, we do also prefer to join rather early, so pre-seed, seed, Series A. We do also see that we can at most support at this stage due to our background, our network. So and maybe also just, now it's starting to change, but when we started, I think there were not that many CDR startups which were Series A or B, or it's actually so there are much more early stage startups in CDR. And maybe to add, because many in the audience are probably students, and if they plan to start a company out of their idea, then they are maybe wondering, should they go to a VC directly or where to start? There is even a type of finance before pre-seed, I would say, or so Amanda mentioned already. So either you get grants. There's some university affiliated grants for spin-outs. There are accelerator programs such as the Air Miners or the Remove program, which support you at quite early stage. And then some also start to raise money from family, friends, or angel investors, which are individuals and investing in startups. This can come even before the pre-seed round. It depends a bit on how much traction you get, but maybe this just to add.
That's great. So we're getting a couple of good questions in here. And I like Amanda's idea of pulling in some of those in the middle of our discussion rather than waiting till the end like we typically do. So why don't we take this first question? Amanda, maybe you wanted to answer that. It says, do VCs fund projects generally directly out of university? And if not, what steps would we need to get to a level that VCs would consider funding us? And I think we've talked a little bit, so I guess we're talking pre-seed or earlier at this point. So what would you be looking for in investing at a pre-seed phase? Well, Amanda, maybe.
Yeah, I think that builds off of what Karen
what Karen
what
was.
Karen and Andrew were just saying. So, they both do pre-seed investments. Don't want to speak for them, but there are a handful of venture funds that will invest in teams right out of university. But to Karen's last comment, there's also quite a few incubators or accelerator programs that could be a good fit if you're coming straight out of university to help you, one, make sure that you're kind of proving out the technology and getting through those first few stages of development and beginning to put together a business plan for it. So the short answer is yes, it depends on the fund, but I would say I would caution student teams to think about the different partners that they want at that early stage, and if venture capital is the right first partner. Maybe one comment to make that we hit on indirectly, but as a venture capital fund, each fund has a fund life in which they are expected to invest the money and then return the money back to their investors, everybody that put money into the fund. So as soon as you take money from venture capital, a clock starts that you have to be aware of. The typical venture fund model is a 10-year life, but especially for more deep tech oriented strategies, some funds may have longer fund lives, like a 15-year or even a 20-year fund life that they can operate out of. So that's just one thing to be really cautious about, is recognizing that once you take venture money, there is a more specific timeline that your partners are going to be looking for you to commercialize within.
Great point. Andrew and Karen, did you want to add to that since you're more on the pre-seed side? We also have a question about what you look for in a pre-seed to invest in.
I would say we love investing in teams straight out of universities. It's not always straightforward. And I think particularly when there are tech licensing considerations involved in tech transfer offices, which can help you negotiate, but often will negotiate with you, it can be quite complicated. And I'd say it varies a huge amount by region. The norms for, tech licensing out of universities in Europe and the US are very different, for example. And I'd say this is an area where Europe often lags behind the US. The US has some really efficient and mature tech transfer offices that are quite pro-founder and quite helpful. And in my country, the UK, I wish that would more common, but unfortunately, it can be really difficult to get commercial license agreements with great universities. So I think it's also sometimes true to say, great science doesn't necessarily make great business. And for VCs who are on the outside, you need both of those things. So I think for teams looking to spin out of university that haven't got any commercial background at all, quite often we need to find a way to get that experience thinking about how they're going to go to market, how they're going to commercialize, how they're going to grow, how they're going to turn a good piece of science into commercially effective business. I think that was linked to kind of the second question here.
Mm-hmm.
Sometimes having that business profile in among the team can be absolutely essential to figuring out those kind of hard commercial questions.
Okay, great. Karen, did you have anything to add on that?
Yeah, maybe just to the last point. So we've seen both. So we've invested in like scientists only founder teams, which were aware of the fact that in the future there should be an additional co-founder joining, bringing more the business experience. So they were very much aware of this. But the stage of the startup was like that. The tech needed anyway first a bit more development, so this was fine. And for others, it's like depending on the stage, it's very good if they bring already this combination scientific and business experience in the founding team. So it depends a bit, but yeah, both possible.
Okay, great. So I was at a conference earlier this week, the DAC Coalition Global Director Capture Conference, and the big thing, sort of overarching mood of the conference was very much affected by the current political situation out there with the Trump administration. And I'm wondering, and I think probably students are wondering about this as well, even though this is a global program and not a US focused program. How do you see the current political environment affecting business and VC activity at your company or more broadly around the world? Anyone want to jump into that one? Maybe Andrew?
Sure, I can have a go. I'm sure we'll all have something to say about it because it's kind of the topic right now. I was also at a conference last week. I was at the Hello Tomorrow Deep Tech Summit in Paris, and I was reflecting on how much the conversation topics had changed from 2 years prior, which was the last time I attended the same event. And 2 years prior, I felt as a climate fund, I felt like I was in the hottest part of the sector. Like it's the bit that everybody wanted to be, everybody wanted to talk to me. And, it just felt like the hive of activity was centered around climate. And last week, let's be honest, that was no longer the case. Saying I'm in climate felt almost like old hat. And, everybody wanted to be able to say I'm in AI or I'm in defense. And a lot of people had recast themselves as either being in AI or in defense, without necessarily changing what they did. But I think it's fair to say there's a chill in the air, in terms of climate investment. But I think there are also some silver linings, and I think actually for CDR in particular, there are some silver linings. I hesitate to make CDR out to be safe from change. Like, of course, that would be complacent and foolish. But I think there are some fundamental physical realities to bear in mind, which I think mean that if anything, the need for CDR is greater today than it was a year ago. The simple reality that the longer we prevaricate and slow down decarbonizing industry, the more we're going to need CDR. We'll have more historical emissions and we'll have less time. I think the other reality, of course, is that the shape of the marginal abatement cost curve, which shows how much it costs to remove each incremental gigaton, is only steepening. And again, the longer we wait, the more it steepens. And as of today, I think something like 25 to 30 gigatons of our global emissions sit at a marginal abatement cost of more than $100. And I think most of us in this group would probably say $100 is in range for a lot of CDR pathways. So actually, it's plausible that it will be cheaper to do CDR than to abate emissions for quite a large number of industrial use cases. Now, I'm not advocating for that would be wrong, but I do think the more we are driven by economic imperatives, actually the more CDR comes into focus. And I think, for example, the airline industry is a good example. In the last 18 months, I'd say, we're hearing more and more airlines coming to the table saying, well, actually, we think that in a lot of use cases, CDR makes more sense than SAF. And we're going to include that as part of our decarbonization strategy. And so we're seeing more and
to explain, SAF is sustainable aviation fuel.
Sustainable aviation fuels as synthesized from green CO2 and hydrogen, which is expensive to do. So I also think to some extent of all of the climate activities, CDR is the one with the most bipartisan support in the US and in Europe, and the one which has frankly got the most support from various industrial lobbies, including energy and aviation, and the one which creates the most jobs. That's what this ultimately comes down to. Last but not least, I think there are a lot of pathways in CDR that have co-benefits or co-products, which are really, really valuable and which are really important, particularly in this new political reality. So critical minerals and metals being one of those, for example, the CDR can help reduce our reliance on metals, for example, that are mainly mined in China. And that feels like a very strong Republican agenda. So I think not to say that CDR is politics proof, because nothing is, but actually I think there are a lot of points of congruence politically, and CDR is potentially less exposed than some other parts of climate investing. Of course, I regret that we're not all investing in climate all of the time. But for me, there are some bright spots as well for CDR and for the students in the room. I think I'd encourage you to think about what those bright spots are and to play into them, because CDR has to be an investable commercially successful, self-supporting industry and not just a philanthropic activity.
Excellent answer. And I love the way that you found the silver lining there. That makes a lot of sense, and it's not just aspirational. I wish it were good. You made some really solid points there. Karen and Amanda, do you have anything to add to that in terms of how that's affecting your business?
Yeah, I think I agree with what Andrew said. It was a very good view. Yeah, I see definitely. I mean, the current situation is definitely leading to some turbulences and uncertainties in the CDR market right now. And I do also see some investors like, being more reluctant in investing in climate-related topics, including CDR. However, I do also see that there are still many impressive funding rounds, especially coming from strategic investors, be it in the energy or also in the airline sector. So, yeah, I think there's still it's still continuing. It's not like just everything on hold. And yeah, maybe also to add, I feel like in the recent years, the US was seen as probably the best place to start a CDR company. And I think this is now shifting, which could also create opportunities for other geographies, such as Europe, or also in Japan, there's quite some momentum. And yeah, luckily not all governments are deciding to decrease support. Yeah, just in Germany this week, there's like, they're about to decide for 100 billion climate and transformation funds. So yeah, there's still also like positive things happening. Yeah.
Great. Amanda, do you have anything to add?
Yeah, I would maybe just underline a couple points. It matters right now in the sense that, one, it can impact the sentiment for certain investors. So someone where you may have had more investors that would be open to funding your business, I think that total pool shrinks a little bit given the uncertainty that the Trump administration brings. And then two, Andrew hit on this, but it also, depending on where you're operating, it impacts your potential revenue streams. So it makes you more reliant on, the voluntary carbon credit market within the US versus expecting or hoping for regulation that may drive a compliance market. So from our perspective, what that means for our investment within the space is, Andrew mentioned this, but we're laser focused on what are the co-benefits and what are the other revenue streams that you can generate as a business beyond relying on carbon credits for your business. So that's why we look more at things such as carbon capture and storage within industrial processes, where you can make an argument on how you're adding value for your customers through the solution versus something like a direct air capture. Or, in the case of CO2 utilization, where you're selling a product, you're able to kind of take CO2, convert it into another product of some sort, like a synthetic fuel, that has inherent value, again, beyond the value of any carbon credits. So from a business lens, that's how we think about the kind of key impact in evaluating startups right now, especially in the US. But to Karen's point, geographies are very different, and there are lots of geographies that still have very strong policies supporting CDRs.
Yeah, Amanda, that's a really good point about the utilization. And one of the things that came up at the DAC conference is that companies are trying to figure out, okay, we can get the CO2 out of the air, but then what do we do with it? And if we're not near a storage facility, how can it be utilized, and who's going to buy it, given that there's risk and it's a small amount as we're starting, and so on. So I sort of feel like if there was, that's a key reason for people to even work on utilization in general. I think there's a big demand out there for somebody who can take this CO2 and do something with it to monetize it. Yeah, so great point there. We've got a couple of questions that have come in that kind of tie into this discussion of the early pre-seed and should we do a startup? We've got university IP potentially, or open source technologies. Do you have any thoughts about that? Like it ties into one of my prepared questions of is it a good idea for you to have a startup, given that there are a lot of startups out there? How are you going to differentiate yourself? How are you going to survive? You've got some other issues around IP or open source. What are your thoughts around that?
I could take a stab at the IP and open source part of that.
Yeah.
There's a lot in that question.
Yeah.
I'll have a go, and I'm sure Karen and Amanda will have a lot to add. I think we see quite a lot of CDR companies relying on IP that's been developed within universities, and very often that implies a licensing agreement. And those licensing agreements can vary significantly. So the answer is, how does university IP ownership impact how we look at them? A lot. But absolutely doesn't rule it out. It's just really important to get this right. So I would say probably some 20% of the companies in our portfolio, maybe 30%, have some kind of IP licensing set up within them. Very often that would be a global and exclusive license to use the technology, but it will come with a fee. And that will typically be some combination of royalties, potentially sub-license agreements, and it may or may not be geographically or field of use constrained. And so we quite often help founding teams negotiate those license agreements with universities, and we have a decent idea of what sort of normal looks like. It's very important to get that number right, because actually, a percentage here or there can be the difference between competitiveness and actually a business that just isn't viable by the time you kind of see the impact of those royalties through the sort of the value chain, if you like. Also, sub-licensing can be really important, particularly I'd say in fields like direct air capture. Quite often, our belief is that a lot of the companies that position themselves as full stack DAC companies today will end up licensing their technology to project development companies or to companies operating in the DAC hubs. And in that case, actually, sub-licensing becomes really important. Now, usually, sub-licensing technology that's been developed in the university comes at a premium with an extra royalty. And you want to make sure that those agreements are not prohibitive. So I think it's really important to check the small print. Most universities want their founders to succeed, but they also have mature tech transfer offices that are very experienced negotiators, and quite often the counterpart here, the founder is not very experienced at this. So I think it's important to get good advice. A VC can help you with that, but very often there are lawyers who are very experienced in this specific field, and I would generally advise that it's worth paying the fee, even if it feels expensive at the time, because it can be very hard to reopen these agreements. And in the end, the tech transfer office's mission is to make money for the university. So think long and hard about this, and it's worth doing the work. Would we consider funding open source projects? I would say never say never, but it's more difficult, right? So there are very successful companies out there that have built big businesses off the back of open source technology. Usually this is in the software domain, so I'm thinking of companies like Cloudera, or companies like, that manage Apache Kafka instances or things like that. Generally, they become service providers around a piece of open source technology, and they create wrappers or enablers or service propositions that go with those. I think when we think about direct air capture, it's more difficult to imagine that, because those sort of service layers are typically going to come with project development. And actually, VCs like investing in the intellectual property, because that's precisely what's going to create that kind of value accretion from the very early stage. So it's hard for me to imagine an open source DAC project being investable, precisely because it's the IP, it's the thing that's creating that kind of ballooning value. But I do think, that doesn't mean there isn't a big role for open source. For example, our belief is that open source MRV in enhanced rock weathering is going to be absolutely critical to that pathway scaling. We can't see how it happens with proprietary solutions. And I could sort of imagine how a consortium of companies could come together to create that. And that might still be exciting to invest in because of what it unlocks. So I'd say I would never say never to that, but I think it is definitely much more difficult.
Okay, great. Thank you, Andrew. We got a lot of good questions coming in. So I'm just going to shift over to the student questions here. Let's see. There's so many good ones. John, let's see. John Moat asks, are there incubators or accelerators that you know, kind of stand out in your minds as, preparing these companies to scale? We've partnered with some accelerators, like Activate is one of our partners for the program. Air Miners is a partner, and they have some programs for startups as well. Are there any others that come to mind you want to just throw out there for people to look up?
Yeah, maybe for the ones in Europe or also in India and Africa, there's from Remove, an accelerator program focused on CDR.
What was the name again?
Remove.
Remove. Okay.
From like remove. And they have one cohort in Europe, one in India, and one in Africa. And maybe also, I mean, there are the accelerators where you usually join when you have already a co-founder or an idea, but there are also these venture studios, so which is maybe interesting for people who are even earlier. So you want to build a startup, you want to partner with another co-founder, you maybe do not have a co-founder yet, and then it's worth to have a look at these. In Europe, I know there's Marble based in Paris. There's Deep Science Ventures. There are many more, I'm sure. Andrew and Amanda maybe know more. But also
I could throw out a couple.
Studio.
Generator has a carbon removal accelerator as one of their cohorts. If you guys already mentioned Air Miners, Breakthrough Energy Ventures is one in the US that does quite a bit of investments in the carbon capture space. SOSV also has some programs like Hacks and IndieBio, with a few kind of focused on CDR. And then certain like corporates will also have programs or incubators. So for example, Blackhorn Ventures have IgniteX is a carbon dioxide, a CDR accelerator that they run. So that's just a list to get you all going.
Yeah, and
I'm sure I missed some.
Elemental Accelerator, TechX in Scotland. There's so many, but
there's so many. Yeah, and I was
fantastic, and everyone that's just been mentioned is brilliant. So have at it.
And there's a new program called CarbonX that Tencent has launched, and they have and we'll send out more information to the students around this, but it's like a prize program where they have, I think, $10 million to give out to startups, and CDR is one of their categories. So CarbonX is not quite an accelerator, but a way to get funding. All right, so we have a lot of other questions here. Someone asked, how did they decide if they should do a startup or take their idea to an existing company? Any thoughts about that?
I feel like I'm talking too much, but I'm going to jump in.
Okay.
I think it's really, really, really important to want to be an entrepreneur to do a startup. I think it's a whole adventure, and it's not for everyone. And I love being an entrepreneur. I've found it a really fulfilling experience, but it's also been the most stressful experience that I've ever had in my life, and to be frank, it's not one I even would repeat in that right now at my life stage. I think it's a really individual thing that should be about your passion, but also about your personality, what gives you energy, what you're strong at, and uh, there's no kind of badge of or medal that you get for being entrepreneur. It's not better than not being entrepreneur. It fits certain types of people really, really well, but it's not the only way to bring ideas to life. And I think, particularly for this group, just because this is a panel about carbon removal and VC doesn't mean that those two things have to go together or that they have to go together for you. They go together for us, and that's cool. But I think there are lots of different ways to bring technology to life, and getting a job and scaling technology is just as honorable and maybe even more impactful than starting a company. So I think the things I'd say you really have to be an entrepreneur are perhaps not even related to the things that you need to have a great CDR idea. First of all, you have to have incredible conviction in yourself and amazing ability to be a self-starter, to find that energy from within that will get you off to work, go knocking on doors, going to push ideas when nobody believes in them. And that's not everyone, right? A lot of people get their energy from others and from outside. I think entrepreneurs need the ability to generate that kind of self-belief and determination from within and to bring people with them. They need to be extraordinary communicators to bring other people with them on and take them on that journey. And that's not the same thing as communicating a technical concept, but it's actually the idea of bringing people with you. And they need to be willing to do whatever it takes in terms of activities. I think it can be very distracting and sometimes disappointing for founders who have a technical background to find that actually they have to spend most of their time fundraising, doing finance and spreadsheets and HR, negotiating with landlords, trying to rent equipment. It can feel very much like a distraction from the thing that actually really motivates them and a cost. And that's tiring. Even people who are capable of doing those things may lose energy by doing them. And so think really hard about what gives you energy, whether it's the research and the discovery part, or the act of building, creating, and commercializing something. And then think about whether you'd like to, work as part of a team that delivers on all of those things, because it doesn't all have to come from one person, and how that all sort of fits together. But building companies isn't for everybody. It's a special thing, and same as deep science isn't for everybody. But it's very rare to find people who get motivation and energy from those two very different spheres. So I think it's important that panels like this, we don't sort of idealize like being a CDR founder as the objective. The objective here is that we make CDR massive, and that will take founders and it will take non-founders.
Yeah, that leads into another question we have is, how do you find a co-founder? Like, is that something that VCs can help with? Do you need to have your founding group together before talking to VCs?
Yeah, I can jump in quickly, and then Karen, I'll pass it to you. But my quick high level here is we have a very strong bias to founding teams instead of single founders. To everything Andrew just said, it is incredibly hard to start a company. Teams are much more likely to succeed than sole founders. So would highly suggest finding a co-founder. And then it really just depends on where you are and what your business looks like, whether you need another technical founder or a non-technical founder. We mentioned earlier that especially as you're starting to get closer to the seed stage, having a business-oriented or a commercial co-founder is really valuable. VCs can absolutely help with that. We do a lot of talent introductions and bringing people together on the co-founding side, but a lot of it also ties to just the network and just to Andrew's comments, like so much of it is personality and finding that right fit. At the early stages, we find a lot of the times teams can be just as much of the risk as the technology. Lots of companies fail because of teams and team dynamics, not because they don't have a great technology. So it's really important. And maybe the last like bias I would give is building off of Andrew's comments is, if you have an idea and you have conviction and are ready for startup life, go for it. Absolutely. There's a ton of great opportunities. That said, I think there is also a ton of value in getting some other experience before starting a company. One, it will be easier to raise money if you have some kind of background, and both Karen and Andrew give great examples of operating background or kind of deep science background that then will also inform and help you build a really successful business.
Great. Okay, we got 5 minutes left. I definitely want to hear your advice about students who want to seek jobs in VC, but let me just see if there are other questions that you guys want to answer real quick before we jump to that. There's a question about should they patent their work before seeking funding. There's a question about how can you expand as an American founder into European markets. Anyone want to take either one of those?
Yeah, I'm happy to take the one on the patenting. I think here it also depends probably. So we do talk to some founders who have a technology and which are in the process of patenting or plan to patent, and then they're sometimes a bit reluctant in sharing details, which I think for some VCs is okay, for some VCs not that much. Like I, as a chemist or as a scientist, I really want to dive deep into the tech before we invest. But there are also ways to solve this. I mean, you can sign an NDA and then still share the details, even though the process is not patented yet. So I think it's not necessary that it's patented before you go fundraising. Yeah, I mean, it's also not for like patenting is not for free, so it also depends a bit on can you afford it at this time, and but I think it depends, and maybe more, it's maybe not that much important like at which stage in the fundraising process you are, but more really where are other researchers at. I mean, is there really the could it happen that someone is faster than you with patenting? So this should be probably the question to ask, and also like how important is it to have this patent to proceed.
Okay, thank you. So the big question, how does a student get into venture capital? What advice do you have for students who are interested in that?
I can start off on this one because I get this question a lot. One, I would say it is very hard to get into venture capital straight out of undergrad, and I generally would not suggest it. And then there's really 3 ways to get into venture capital, and thankfully you guys have an example of each of them on the call. One is you really get finance experience and you understand the investing perspective, and then you specialize within the sector that you're most interested in. 2 is that you have deep operating and startup experience, like Andrew. You know what it's like to build something, and that makes a huge difference in just being a good venture capitalist, understanding the entrepreneurship life and what it looks like to go from 0 to 1. And then 3 is really having very specific sector experience and knowledge, a deep expertise like Karen does, having gotten her PhD and understanding that space specifically. So I think from what I have seen, those are really the 3 pathways that you can use to get into venture capital. And in general, even if you are going the finance route, I would typically not suggest trying to go straight into venture capital. I would suggest trying to get more baseline financial skills, even if it's within the sustainability and climate space. There's a lot more opportunities now to do that than when I first started, but that would be my high level advice.
Thank you.
Yeah. Yeah, maybe to add, I think if you know already that you would like to go into VC, then I would look for, there are, and at some universities there are student VCs where actually a team of students raises money and is like acts like a VC. There are some venture capital firms who have venture scouts, so people around the world, students or also more senior people, like supporting them and finding startups. There are internship opportunities, either at a VC or at a startup to gain first startup experience. Student entrepreneur clubs. So I feel like if students get into VC right after their studies, then they usually bring these experiences from internships and etc. From what I've seen, yeah.
Great.
I know we're going to wrap up, but I would say just 2 words of warning. Well, I love this job. I feel like I was born to do this job, but it's not for everyone, and it's not like Shark Tank. There's a lot of things about VC that you don't know until you do it. And so I'd say for those of you that have the opportunity, doing an internship so that you can experience a little bit of what VC is really like is a good thing. Now, internships themselves are competitive, but bear in mind, we say no to 99.something% of companies that pitch us. And the ones that we say yes to, we have to get into worlds of complexity and diligence and legal process and compliance. And, there's a huge amount of stuff that comes with being a VC that you don't imagine when you think about yes, I'm going to give you a bunch of money and we're going to build a great company together and we're going to take it to the moon. And you have to be excited about that sort of overhead. And then the other thing I'd say is getting into CDR is really hard because it's a tiny industry. Getting into VC is at least as hard again. Getting into CDR VC is probably not a career goal that anybody should have, because the intersection of those things is basically this call. And so, think about which of it is, what are the components that you really want to see in your career, and be a bit open-minded. As Amanda says, if you want to work in VC, probably the worst thing to do is to try to get a job in a VC tomorrow. So it's a sort of multi-step path, and think about weighing all those different components.
Great. Well, thank you so much. I know those were key thoughts that a lot of the students were wondering about. So thank you so much. It's been a wonderful panel. I think really high value for everyone here, and we really appreciate you being willing to spend the time with us. And thanks to everyone who submitted all those great questions, super interactive today. I think that's the most interactive we've been in our 5 webinars to date. So we have one more webinar coming up in April. We're still planning what that will be, but it sounds like maybe getting some accelerators together would be a good idea. We'll bounce some ideas around. But thanks again to everyone, and we'll see you next month. Okay, take care. Bye.
Thanks, everybody. Good luck.